Haseeb Drabu is joining us right here in our studios. Haseeb, thanks very much. Good morning. Great to have you with us. Let's start by talking about the asset quality issues at public sector banks. I mean, something that we spoke about a couple of months earlier. We had Mr. A.K. Purwar. I was hoping that you'd be able to sort of join in on that discussion. And he was saying that, he would like to see much more restructuring, much more aggressive restructuring from banks to sort of tide over companies, individuals in these tough times. He says, that's the responsibility of, that's one of the responsibilities which banks and especially PSU banks have shared, and he'd like to see more of that. Where do you stand on it? Friday we got lots of PSU bank companies reporting earnings, and all of them, sharp increases in restructuring, gross NPA levels, etc.
If you remember last time I said the same thing, that, you'd actually find that I was a bit surprised at why banks are not showing poorer results, because it was very obvious and staring us in the face that asset quality is deteriorating very fast. As far as the comments of Mr. Purwar go, I obviously can't say much about it, except that I think these are strange times. That RBI now writes a report, its working group report, which says that we are looking at it from a social perspective. Now, if restructuring is a social issue, then I have nothing to say. This is a macroeconomic problem. And the whole justification of restructuring in the form of CDRs and all emerged from a fact that you had an environment that wouldn't allow some businesses to grow for some time, which is why you allow restructuring. But it's gone far beyond that. Quite apart from allowing restructuring, I think what I would recommend is right now to look at a very strict prudential norm system, because otherwise it's now going down the hill. Asset quality is not just alarming, it's really reached a proportion of crisis. Today, the rate of growth of NPAs is higher than the rate of growth of credit in this country. So what you're actually saying is there's negative investment capacity in the system. There's more investment that is becoming impaired than fresh investment coming. In that situation, the next step, logical step, is that you will have banks which will go into a tizzy, particularly PSU banks, because if they start doing what they're doing now, or continue doing what they're doing now, they don't have the capital to back it. In 6 months' time from now, they can't lend. And they can't lend to these sectors because these are risky sectors, which requires a higher risk rate, which means the capital adequacy comes down, and government is not standing behind their back with bag loads of cash to refurbish their capital. So you will have the step 2, where banks will have inadequate capital adequacy ratio falls, they can't lend, they'll stop lending, impairing growth, post which it's a solvency issue.
Unless in between the macros turn around significantly.
Which hasn't. RBI made the same mistake 1.5 years back, saying that you restructure, when they did sectoral restructuring. All these are coming to the book now, because macroeconomic growth hasn't turned around. I don't think there's anybody in the system today, including RBI, that says that in a year from now, I'm going to see 7, 8%, 9% growth. Nobody's saying that. So you're still looking at a 2-year time frame. So restructuring is done in a phase where you see clearly that this is a business cycle problem.
All banks.
It's not an issue of a particular company. And that you also see that in about 6 to 8 months or a year from now, or 2 years from now, you will see clear growth. And you bet on growth, which is not happening. Certainly not.
So, in a way what we're saying is if macros remain like this, we should expect more of this, right? With the RBI in a way sort of asking banks to...
Well, RBI is not asking for banks to...
Not asking, but
Well, in this report, it's trying to make restructuring a little more difficult and a little more expensive for banks to do by raising the provisioning on it. Though my own view is that it's not enough. And I would seriously think tomorrow, people should not look at rate cuts. I wouldn't be bothered. Rates are cut, it wouldn't matter. You have seen what happens after rate cuts. Markets don't transmit the hikes or the cuts. It doesn't cut, well, nobody's going to be surprised. The real thing to look forward tomorrow is what is RBI going to do about prudential norms tomorrow? It had lower provisioning, making the banks weaker and vulnerable. Is it going to come back and say, no, do a NPA coverage of 70%? RBI seems to have forgotten, largely aided by the media, that it is also a duty for prudential and regulatory norms. It's not just about interest rate cuts. I haven't seen a single line in the RBI's last credit policy talking about prudential norms. This is the time to talk about it. raise back the provisioning norms to 70%. Your NPA coverage ratio has to be 70, which RBI lowered to 70 and said, you can do it retrospectively from September 10. Bring that in. Bring in specific sectoral provisions. At least make restructuring as expensive as regular provisioning. Because all CDR asset or restructuring is actually an impaired asset.
Yes.
It's not a standard asset. So why does it have to be provided less than a substandard asset? Now, here, please understand that you are actually supporting business. Why should banks get the concession? There's no problem with banks, right? So why should banks not provide? They should make adequate provisions for the NPAs. Somehow, the fact that you're restructuring an account seems to also help the bank. In some perverse way, you're saying you reduce the provisioning. Why should I reduce the provisioning there? Bank is not in trouble.
Yes.
A business is in trouble. So give him, restructure his accounts, whatever. But please don't weaken the banks, because that is something that's held you.
Provide for fully.
Provide for it as an impaired asset.
Yes.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.